Hello and welcome to AI Market News by LM. Today, we're diving into the jitters that seem to be shaking up global markets.
Yeah, anxiety really seems to be the word of the day, doesn't it? So we're going to break down exactly what's gripping the markets. We'll kick things off with what happened overnight in Asia, then see how that's rippling into the US markets. After that, we'll try to decode the sentiment that's driving all these decisions. We'll take a quick peek at currencies and then wrap up with what we all need to watch for in the week ahead. All right, let's get into it.
So, the story of today's market jitters. It really begins with the trading sessions over in Asia. They pretty much set a decidedly negative tone for the rest of the world. And this quote, which we've seen in various news commentary, just perfectly captures that risk-off mood, that feeling that defined the whole overnight session. But what exactly are traders so fearful of? What's really going on here?
Well, based on our analysis, it looks like there are three main things, three core catalysts driving the sell-off. First up, we've got some pretty hawkish commentary from the Fed, signaling they're getting tougher on inflation, and that's really tamping down hopes for a December rate cut. Second, there's some weak credit and property data coming out of China, and that's sparking fresh concerns about their economic stability. And finally, and this is a big one, we're seeing a broad unwinding of that huge momentum we've seen in AI-related trades, the stuff that's been a major market driver until now. So that wave of anxiety from Asia, it's now washing up on US shores, and you can see it plain as day in the pre-market numbers. And here we go. It's just a sea of red for US futures right before the opening bell. What's really standing out is the tech-heavy NASDAQ 100. It's leading the decline, down almost 0.6%. And yep, that connects directly back to what we just talked about, that unwinding of the big AI trade. This chart really drives the point home. This weakness isn't just isolated to a few big tech names. No way. This is a broad, widespread sell-off. I mean, with over 3/4 of stocks declining, that negative sentiment is clearly washing over the entire market. So, with all this selling pressure, it's really worth taking a moment to actually measure the psychological state of the market. What is the dominant emotion driving all these decisions right now? Let's try to put a number on that feeling. Is it greed, pushing prices to new highs, or is it something else entirely? To get an answer, we can turn to a really useful tool, the Fear and Greed Index. Think of it like a thermometer for market sentiment. It pulls together 7 different indicators to give us a single, clear reading on whether investors are feeling more fearful or, greedy. And the reading today, it's a 38. And that number lands squarely in the fear category. It's a pretty clear signal that investors are getting more skittish, pulling back from risk, and looking for safety. And look, this score isn't just pulled out of thin air. It's driven by real data. For instance, we're seeing a rise in market volatility. You often hear this measured by the VIX, the fear gauge. We're also seeing a big increase in safe haven demand. And what that means is investors are moving their money out of riskier things like stocks and into the relative safety of bonds. This whole flight to safety thing is also super visible in the foreign exchange markets. They're another fantastic, real-time barometer of global risk appetite. Okay, so looking at 2 key pairs here, we can see the story playing out. The euro is showing a bit of weakness against the US dollar, which is pretty typical when you get this kind of risk-off environment. Everyone flocks to the dollar, right? Meanwhile, the dollar-yen pair is holding steady at a high level, and that reflects that lingering uncertainty around what the Fed is going to do with rates. So, the big question is, where do we go from here? What should we be watching for as we head into next week? Well, as seen in the provided information from investing.com, if we look at the upcoming economic calendar, there are a couple of major data releases that could either calm these market jitters or, pour gasoline on the fire. There are 2 key reports on the docket. First up, we've got the Producer Price Index, the PPI. That'll give us a read on inflation at the wholesale level. Second is the retail sales data, and that's a vital snapshot of consumer health. Believe me, the results of both of these are going to heavily influence whatever the Fed decides to do next. And that brings us to the big million-dollar question hanging over everything. With all this data pointing towards fear and these key economic reports on the horizon, are the markets going to find a floor? Or is this Fearful Friday just the beginning of a much deeper correction? That is what everyone is going to be watching. This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion. Thanks for watching. Don't forget to like and subscribe.